Welcome back to Ways to Love Your Money. I'm Elizabeth Dawson, and today we want to talk about Disability Insurance Awareness Month, which is the month of May. So this is a time when financial advisors get together and want to educate people about disability income protection. Sometimes you have something that's available through your employer and you don't necessarily know what it is. So something called short-term disability and long-term disability as options. Now, maybe it's not enough to cover your pay. So what most employers will offer is something up to about 40%, and then you have to elect additional pay coverage up to 66 2/3% or even close to 70% of your income. So think about this. If you're living off of 100% of your income right now and that's barely making it by, having a protection in the event that you become disabled is a bigger key. So what are some of the questions that you want to ask yourself? If I become disabled, now let's think about this. It might not just be due to a health event. Under these circumstances that we're living in today, it could be, but it might be from an accident. When you get back to real life working back in your businesses and you start to go on the highways, and every morning, what do you hear? You hear the traffic. And what do you hear about that traffic? You hear about accidents and who's going to delay you in getting to your business. Well, those are things to consider. So accidents are a big portion of what actually can create a disability. So between the ages of 35 to 65, 1 in 4 people will become disabled. Whether that's fully disabled for the rest of their life or disabled for a period of time. But that's a huge statistic, 1 in 4 people. So that's information from years ago. We've even seen information that's tightened up to 1 in 3. But again, I just want to show you what's actually been reported out there. You can Google that yourself. So how do we protect ourselves? We want to make sure that we have income if we become disabled, because who's going to pay for our mortgages, our rent, the lights to stay on, the TV, the internet, food? Gosh, food's an option, right? What if we can't drive our cars anymore? What are the decisions that we're going to do? But we have a loan, or maybe we have insurance that we can't afford to pay. So it's called the living death. Disability is called the living death while we're alive in the event that something inhibits us from being able to work. So think about that. Another thing people think about is the state has something that we're paying into in California called SDI. So it's basically a disability, and SDI is also a Social Security disability. We're paying into those pieces thinking that the government will take care of us. Well, in the state of California, if you're paying into that, you're going to have something called 26 weeks of disability. It might be a smaller amount of income than what you're living on today because they have limits. Then when you go to Social Security disability, if you are disabled for more than 6 months and it's a full-term, long-term disability, well, that might take up to 6 months for you to actually get it through. You've got to have medical records. You've got to sometimes talk to their doctors, go through their doctors, get appointments, all of that to see if you actually are elected to become part of the Social Security disability system. If you don't want to leave this to chance, it's time to be proactive versus reactive. Now is the time that you have to have opportunity to check into these things for yourself, and then also make sure you're aware of what your disability benefits are through your work. And if you don't have benefits through your work, then maybe it's time to get them from a financial professional that they can actually go and market this for you and get bids for you to see if you qualify. Remember, disability insurance, which most people don't know this, is a health insurance. So if you have good health right now, it's a good time to do it. Do these things when you don't think you need it, because that's probably the best price and the best underwriting you can get. Again, remember, we want to get as close to 66 2/3% of our income, because then that's money that comes to us. Another point that I want to bring up is that if you're paying this through your employer, make sure you're paying it with post-tax dollars, because when you get that benefit coming to you, you do not want that income to be taxable on top of that. Think about this. If your employer is paying for it, which I know a lot of people have their employers paying for this, that means that the employer is taking a deduction, and now you have to pay taxes on that income when it comes to you. No one wants to do that. But if you have an option to get that income tax-free, that's the goal. So pay for those benefits post-tax, after taxes have been taken out from your paycheck, and then you will receive those income payments tax-free. This is a lot of information, but I think it's important for you to know about it. So give us a call. We'll be happy to help you navigate through this. 619-640-2622. If you want to email a question about this, email it to Elizabeth with an S at questions.Dawson.com. Take care. Look forward to talking to you soon. Bye-bye. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.